Risk radar, no changes, but a quick analysis of the way we reacted to Jerome Powell and the CPI. Green light means go. Stocks still have it. That's good. Yellow, though, everywhere else. I'm sorry, it's not changing. Even today, we had volatility and pushback within the session that keeps bonds, dollar, and crypto range bound. The thing for stocks is that we already know what's been driving it. It's concentration, it's AI, it's the big tech. We've already learned that we don't need cuts. We don't need a dovish Jerome Powell. The question has been, will we get that to spur an everything frothy rally? Once again today, that type of rally was mostly rejected. Not entirely though, but the fact that Bitcoin faded down, number one, this thing's looking weak at this point. For all intents and purposes, given the history of Bitcoin trading along risk assets, stocks just keep grinding, making new highs, and Bitcoin can't do it. In fact, it still really hasn't made meaningful higher highs compared to where it was in early spring. So watch it very closely over the coming days. Another failure to rally for Bitcoin. Look at the way bonds and the dollar also had pretty clear pushback from their initial CPI-driven responses. 10-year yield dropped like a rock, but then grinded its way back. And in fact, even if you look real closely on the wick for today's candle, the 10-year went below the previous one, which would be extending and really confirming an intermediate term downtrend, but the fade in bonds and the creep back for the yield by the end of the day, actually the body of the candle isn't below the previous month. So we got below that level and then it couldn't hold. So the bond bears are still trying to make a fight ahead of PPI tomorrow. PPI comes in light. You do want to really take these readings from bonds and apply them generally to the Fed, because Jerome Powell said, look, today's number was good, but it didn't inform any changes to our dots. The team saw it, and they still said we're going to cut less than we thought we did last time. That was really important. It's not hawkish, but it's not dovish. That's why the dollar also firmed up too. Greenback just doesn't really have a reason to slide too far when we still are holding out and being patient and not eager to cut. The dollar still is very much range bound. So if the dollar doesn't decline, if the dollar stays bid, that really limits the scope of the everything style rally. The Russell 2000, Bitcoin, that's what I'll be watching tomorrow after PPI. Have a great night. Thanks for tuning in.